Monday, May 20th, 2025. Welcome along to the Finwell Daily Brief.
Hello there. This is our 42nd edition. Great to be here.
And we've certainly got a packed update for you today. Some really interesting market movements and key regulatory news.
Absolutely. Lots happening, some things that, listeners really need to be aware of.
Okay, let's kick off with our financial fact of the day. And this one's quite something. For the financial year 2024-25, India's household financial savings rate, well, it jumped to 11.6% of GDP.
Wow, 11.6%. That's significant.
It is. That's a big leap, 180 basis points up from the previous year. And what's driving it? Well, it seems to be more people like you getting involved in equity markets and also those small savings schemes doing well.
Right. So broader participation.
Exactly. It really speaks volumes about perhaps our growing financial savvy, doesn't it?
It certainly does. It suggests a wider base getting into saving and investing. The big question, I suppose, is this a lasting trend? And how will all this extra capital affect the markets going forward?
An excellent point. Something to watch. Now, let's get down to the nitty-gritty. How did the markets actually close today? This is as of 3:03 p.m. IST.
Okay.
The Nifty 50, it closed at 24,706.85. That was down 0.96%. But here's where it gets interesting. The Nifty Midcap 150, it actually saw a bigger drop, closed at 20,691.60, down 1.43%.
Okay, so midcaps hit harder today.
Yes. And the Nifty Small Cap 250 also down 16,385.90, a fall of 0.79%.
So that larger dip in the midcaps, could that be some profit taking maybe after they've had such a good run?
Very possibly. That's definitely something to keep an eye on, that relative performance. Valuations might be playing a role there.
Right. Comfort levels with current prices.
Okay, switching gears now to the bond and currency markets. A bit calmer here. India's 10-year benchmark government bond yield, it settled at 6.32%.
Okay, 6.32.
Yeah, and this continues that downward trend we saw in April. Remember, it fell about 23 basis points then.
I do, yes.
And sources are saying this easing is, well, largely thanks to the RBI managing liquidity well and, a generally stable inflation picture.
Makes sense. The RBI's actions and stable inflation are definitely creating a sort of favorable backdrop for bonds.
And what about the Indian rupee? Showed a little strength today. It appreciated slightly to 85.41 against the U.S. dollar.
Oh, interesting.
This seems linked to steady foreign investment coming into our debt markets, plus, the RBI stepping in when needed in the Forex market.
Yeah, those inflows and the RBI's, shall we say, strategic presence, they do provide a good cushion for the rupee against, well, all the global currency swings.
Definitely. All right, let's talk news that directly impacts your investment journey. Big one here. The RBI has just rolled out a new framework for retail direct gilt accounts.
Yes, the RDG accounts.
And this is a real game changer, folks, because now you can directly invest not just in government bonds, but also corporate bonds using this platform.
That is big. So direct access beyond GSECs now.
Exactly. Imagine getting direct access to both primary and secondary debt markets. It's all about, leveling the playing field, making bonds more accessible for everyone.
It's truly transformative, isn't it? Democratizing the debt market, really. By adding corporate bonds to the RDG scheme, the RBI is opening up, well, a much wider range of investment options for retail folks, potentially offering better returns than some traditional routes, too.
Precisely. Okay, next up, SEBI. The Securities and Exchange Board of India is tightening the screws on algorithmic trading platforms.
Algo trading, right. Stricter rules.
Much stricter. They're now requiring real-time trade confirmation slips and making third-party audits mandatory for these platforms.
Okay, why the crackdown?
Well, it's all about tackling fraud, especially something called bucketing.
Bucketing? Sounds odd.
It sounds harmless, but it's really not. Imagine this. You place an order to buy shares at, say, 158. But an unregistered bucket shop, they don't actually place your trade on the exchange. They just note it down internally, maybe at 148, and pocket the euro difference themselves.
So they're essentially betting against their own client without executing a real trade.
Exactly. They're operating in the shadows. These new SEBI rules, the real-time confirmations, the audits, they're designed as a strong shield to protect us, the retail investors, from these scams. And remember, algorithmic trading uses computer programs for speed, so tighter rules are crucial.
That's a very important step by SEBI. Clamping down on bucketing and unregistered platforms, it boosts transparency and protects investors. Much needed.
Definitely. Now, looking globally, things are a bit shaky with crude oil prices. Tensions in the Middle East pushed Brent crude up to $92 a barrel at one point.
Oof, 92 tons.
Yeah, though it did settle back to around $88.50. But the good news for India is our strategic petroleum reserves. They're sitting at a pretty comfortable 85% capacity.
That's reassuring.
It is. It gives us a decent buffer against any, short-term supply shocks.
Maintaining those reserves is just smart policy, isn't it? Essential energy security given, well, the world we live in.
Couldn't agree more. More regulatory news aimed at protecting you. The RBI has new KYC norms. Know your customer rules.
Okay, what's new here?
For investment apps that handle over 50,000 a month in transactions, they'll now need biometric authentication.
Biometrics, like fingerprint or face scan.
Exactly. This is specifically targeting those dodgy, unauthorized trading platforms that try to look like legitimate brokers to trick people. It's another layer of security for your money.
Right, using biometrics for larger amounts on apps. That seems like a proactive way to tackle fraud risks in this digital age. Smart move by the RBI.
And one last bit of news. U.S. Treasury yields jumped a bit after Moody's downgraded their outlook.
Ah, the Moody's downgrade impact.
Yes, and that caused some reaction here. Foreign portfolio investors, FPIs, pulled out about $1.2 billion from Indian equities.
Okay, $1.2 billion outflow. Is that a major concern?
Well, analysts mostly seem to think this impact will be temporary. They point to India's strong underlying economic fundamentals, sort of like a ripple from global events, but our foundation is solid.
Yeah, that makes sense. While global events do cause short-term jitters, India's own growth story usually provides resilience. So the FPI outflow might just be, a passing thing.
So let's piece this all together. What's the market outlook?
Well, today's correction. It feels more linked to those global factors we just talked about rather than any deep domestic issue.
Okay.
That bigger drop in mid-caps, as you suggested, could well be some profit-taking after their strong run. But the bond market looks pretty solid. That 10-year yield might even edge lower, maybe test 6.25%, especially with all that extra cash in the banking system, like 1.4 lakh crore rupees surplus liquidity.
Right, that massive liquidity surplus definitely supports the bond market. Could push yields down further, technically speaking.
And looking at sectors today, IT and pharma held up relatively well, both down only about 0.4%, often seen as defensive plays, right?
Correct. Investors tend to flock to them when the broader market looks uncertain.
On the flip side, realty and metals, they took a bigger hit, down 2.1% and 1.8% respectively. Typical rotation during a correction, yeah. Away from cyclicals towards defensives.
And the rupee, as we said, holding steady, partly thanks to the RBI managing things in the derivatives market.
Good point. RBI's active management helps stabilize things.
Now, this is super important advice, especially after talking about those bucket shops. As a retail investor, you must ensure you're dealing only with SEBI-registered brokers.
Absolutely critical. No exceptions.
And always verify your trade confirmations yourself. Go directly to the exchange portals like NSE or BSE. Don't just rely on what your broker tells you.
That is paramount advice. Verifying independently on the exchange website is your safety net against potential fraud.
Which brings us squarely to this crucial warning. Beware. The bucket shop scam. These operations, honestly, they're financial predators. They look like brokerages, but they never actually execute your trades on a real exchange.
It's a shadow operation.
Completely. They run their own internal books, bucketing your trades, which means you're basically betting against them without even knowing it. Let me paint a picture. You want to buy shares at 150. The bucket shop might just write it down internally at 148.
And pocket the difference.
Instantly, with zero market risk for them. And it gets worse. They use tech to manipulate prices for just a split second, maybe just enough to trigger your stop-loss order.
Triggering stop losses deliberately.
Yes. So they liquidate your position, guaranteeing they make a profit from your loss. It's a totally rigged game.
It's fundamentally deceptive.
Yeah.
Illegal, obviously, and preys on people by creating this fake trading world.
And they lure people in with tempting offers, right? Things like zero brokerage, insane leverage, maybe 100 to 1,
Right.
even promising guaranteed return.
Red flags everywhere.
Exactly.
Oh.
Remember, if it sounds too good to be true, it absolutely is. Unlike real brokers, they skip margin calls. They just liquidate you instantly if the price moves even slightly against you.
So how do you spot them?
Look for the signs. Big red flags. You're not getting proper exchange confirmation messages for every trade. That's number one.
Okay.
Number two, you find you cannot transfer the shares they supposedly bought for you into your own DMAT account.
That's a huge one. If you can't get them into your own DMAT, Something's very wrong.
Definitely. And third, the prices on their platform consistently look different, significantly different from the live feeds you see on the official NSE or BSE websites.
Price discrepancies. Got it.
These are blaring alarms. And that recent RBI rule demanding real-time trade settlement proofs, that's a massive step towards shutting these illegal shops down.
Yes, the inability to transfer to your personal DMAT is perhaps the most damning sign. Legitimate brokers always allow that. Shift to upbeat, enthusiastic tone.
Hey there, savvy listeners. Are you hungry to stay one step ahead in the exciting, sometimes crazy world of finance? Do you crave clarity amidst all the daily market noise?
Want to cut through the confusion?
Then you absolutely, positively need to subscribe to the Finwell Daily Brief. We bring you concise, expert-led updates delivered right to you. Sharp insights, actionable intelligence, everything you need to navigate the financial landscape with real confidence every single day.
Don't miss out on what matters.
Get your daily dose of financial wisdom sent straight to you. And hey, there's more. Want to dive even deeper? Connect with a whole community of informed investors just like you.
Build your network.
Then head over to LinkedIn right now. Connect with SOS Finwell. Let's keep this conversation going, share knowledge, and help each other make smarter financial decisions. So, what are you waiting for? Subscribe to Finwell Daily Brief and connect with SOS Finwell on LinkedIn. Your financial future will thank you, I promise. Return to regular podcast tone.
Okay, back to our wrap-up.
Right. So as we close today's Finwell Daily Brief, the picture is, well, mixed but ultimately constructive, I think. Global events can definitely shake things up short term.
For sure. Volatility happens.
But India's ongoing reforms making the bond market more accessible, strengthening those fintech regulations we talked about, these are really important steps. They build long-term stability and, crucially, protect investors like you.
Agreed. The regulatory improvements are key.
So remember, stay vigilant. It's your best defense. Use SEBI's Scores portal, SCORES. Check your broker's credentials there. And don't ever hesitate to report anything that looks suspicious.
Absolutely. Staying informed, doing your homework. These are the most powerful tools you have as an investor.
Well said. And on that note, we'll leave you with a thought from the great Benjamin Graham. He said, "In markets, truth is revealed not in the frenzy of trading floors, but in the silent transfer of ownership."
Powerful. It really highlights focusing on the real value, the actual investment, not just the daily noise and speculation.
Indeed. Look beyond the frenzy. Focus on the fundamentals.
Exactly.
So make sure you subscribe to the Finwell Daily Brief for your essential daily financial intelligence. And please do connect with SOS Finwell over on LinkedIn. Let's continue the conversation.
Keep learning together.
Thanks so much for tuning in today, and we'll catch you bright and early for the next briefing.